All right, so let's talk some equities. I do think that there's I wouldn't say difficult market ahead. I would say it's kind of indecisive right now. I do think that there's a clear kind of distribution developing and should pan out on the broader equity market, specifically SPY and QQQ, semiconductors, a lot of Mag 7 names. But when we look at a lot of these names, we see names not necessarily correlating so well. I think that's a lot of the pinning of the indexes is the dispersion between individual constituents. But we're seeing names, we'll go look at some examples, right? NVIDIA, building out a distribution. I think the earning report catalyzes something. I think it's going to be a very mature distribution. It's not there yet in terms of taking a position on it, in terms of my optimal short risk to reward. We could have a UTAD. We could have a 196 to $200 fade for an LPSY. It's all up for grabs, right? But then we have Microsoft, right? We have a big rally, a double top, a failure to base 468, which are the 2024 highs, a breakdown off the report, and then the subsequent exhaustion from the sellers into this May 1st earnings gap. It was 7.63%. That's now seeing, a notable kind of, like I said, exhaustion from the seller's perspective and a reversion to the mean, where I think we probably get a $480 to $500 push and could potentially see like a weekly LPSY develop. It all kind of depends on the behavior within that range, but there is a very accumulative kind of behavior and price action being developed throughout here. And then we get the big breakdown of the report where that bidder kind of bails and begins to show his hand in this little $30 window. So you have a name like NVIDIA that's developing a distribution. Microsoft already down, it's probably 20 some percent, 28, 29% from the highs, showing signs of a reversion to the mean. You have Meta building out a distribution, like I said, a very mature distribution on a weekly perspective. This is a little bit of an aggressive rally on Meta from $80 to $800, and now we're seeing the kind of accumulation within the distribution, the gap up from the failure at the previous highs from February 2025, where we saw the kind of inventory sell off from that informed party occur off of the reports and the catalyst events. And now we're seeing the breakdown, the gap fill from the earnings report and a subsequent kind of minor sign of weakness underneath this previous floor of accumulation, and kind of at the discounted range to ideally revert us to the low 600s and then 550 area, right? So a name like Meta, a little bit more of a higher time frame distribution, but kind of already panning out. I mean, we already saw a big time breakdown, 30+% or about 27% from the highs as well. Google, I don't have much of a read on Google, but I do think that this is very distributive. The report, this kind of exhaustion and influx of volume, big time influx of volume into a stall and a subsequent decline into a gap fill, and then the rally into this report kind of giving you an ugly weekly look, right? But nothing necessarily solidified as far as Google goes. Amazon, very similar look to like a Meta. I think this is a potential distribution developing, and we see a big time decline on into the report. This is very capitulatory. A lot of these sellers are going to get trapped, and we see a big time buyer on this earnings candle, very very reminiscent of like the August 2024 and April 2025 sequence as far as reversions go. But very very unappealing chart for me. AMD and the rest of the semiconductor space, I think, are developing distributions. I don't think that there's much of an edge here unless we see like a gap fill that offers a look. But this is a very unappealing chart for me. And Apple, I think, is a distribution is developing, right? We have kind of the preliminary signs, right? We have, a climax and a potential for this to be our UTAD, like our preliminary supply, climax, an aggressive leg, a rally into a UT off the report, a lot of consolidation, right? Which when you think about that consolidation, cause and effect, right? There's not for this, October 31st to November, for basically a month of consolidation and a failed breakout. That means that there's a lot of demand that was wiped from this range and a lot of hands that changed above this high, right? Very liquid earnings candle that was broken out and subsequently failed to be reclaimed as support. And then we see the breakdown, an aggressive sell-off from 288 down to 243, and now kind of a potential for an LPSY at a pivotal spot in the 277 area. And then Tesla, I think that this is a distribution again, but this is one of the names that already kind of saw the reversion. I think, saw the breakdown, and I think we're going to see a little bit of a reversion to a lower high based on kind of like the daily climax that's being developed within an INWOG. So, and then you look at SPY and QQQ, right? Very reminiscent of a distribution, like I've said. The February OPEX, I initially thought this would be our test post-January expiration. We had the news here with some kind of tariff news, I don't know. And then we see the big rally and kind of an unappealing weekly candle closure. Last week's candle was looking pretty gross until we followed through with a 2% green day on Friday's session into the Vanna Charm flow. So that's why I'm thinking very reminiscent of like this range. We could see kind of a rally. We're just kind of wiping their demand from this range, right? Very reminiscent of over here where we have the NVIDIA DeepSeek gap kind of be our first domino to fall, that low subsequently taken out and some gaps filled, and some buyers showing their hand, and then the subsequent exhaustion off of the February of expiration, and into the February OPEX starting the subsequent decline. That's kind of what we're doing here. That's kind of what we're seeing, right? I think we're going to see a 653 path of least resistance be developed for an LPSY to short down to, low 600s. But we're seeing, these buyers show their hand here, here, and here, right? Off this gap, off of this kind of breakdown and bear trap, right? And we're seeing this develop in a way that's going to essentially catalyze an aggressive move lower relatively quick. I just think it's a timing thing, right? QQQ as well, right? We've now seen this gap be filled. I think we could see a UTAD put in above these highs. That wouldn't be super gross to me. I wouldn't mind like a $700 fade, like maybe a couple bucks above 700, or maybe even like not even $1, just a little bit above 700. That kind of psych number has a lot of relevance in terms of movements. But I think that stuff is kind of pivotal. And it's really like there's no clear read quite yet, and that's okay in terms of the indexes, right? But another thing that I kind of notice is the potential for rotations to occur and are occurring, right? Bitcoin being one of them, right? So we've seen a massive we've seen like a massive 50+% decline in Bitcoin from the 2025 highs in October. And a big influx of volume on a 14% day last week, subsequent reversal 12.3% that Friday. And I think you're going to see a lot of, you see a lot of fear in Bitcoin. And I'm not saying this is going to rally to new highs. I'm just kind of thinking if this can consolidate and build out a range, Bitcoin can offer a long opportunity. You look at like IBIT. These have gotten viciously slammed following a noticeable distribution, right? An LPSY, an LPSY, but kind of accumulative looks that give you a sign that this could see a reversion. Naturally, you want like big capitulatory candle on Thursday, followed by a reversion on Friday to put in a very noticeable weekly print, right? Now you want to wait. But what I'm thinking could happen with Bitcoin is maybe we see a little bit of a outperformance into the broader equity decline, and then Bitcoin could potentially hold up relatively well during that, and subsequently outperform on like the pops that we could get, right? I don't want to get too speculative, but we have like gold and silver putting in these historic breakdowns on parabolic shorts, historic moves, and historic like sell-offs and weekly candles that like I just think Bitcoin, when you have all this euphoria in gold and silver and fear in Bitcoin, you could potentially see some of that money, being rotated from the informed party. And then we can see something kind of catalyze a move on this, maybe, towards like the $90,000 range, right? But we'll have to see. That's not something that I'm super like confident in quite yet in terms of positioning. But even like MSTR, right? From this lower high that we put in inside the massive bar by bar imbalance from November 2024, right? We've seen a 75% decline in the price of the underlying, 77. And in doing so, I talked about this candle and how it's very reminiscent of the UNH print. Big time fear, big time volume, the highest in a year. And then the consolidation not really leading to anything notable. But now we have a big breakdown another historic influx of volume, historic, yeah, aggressive, top 5 highest volume weeks of all time. I think this still reverts to 232, and it's on watch for like a break and a reclaim of 155. Like, this is a name that I'm paying attention to as far as this potentially being like preliminary supply, climax, test, climax, automatic reaction, test, failed breakout, spring, and then we can get like a test of supply off of like 131 and then a last point supply of 155. So that's something I'm looking at. I still like Baba, but the behavior isn't really the best right now. I don't know. I'd rather wait for the report. I do like Path. This is just one of those names that really made a nice move and kind of, yes, broke structure to the downside, but the behavior and the volume and the price action is still reminiscent of a strong buyer in a bull tape within this range for a move to $21 to $29. Um, but it was just kind of it's a big pop, and then a buyer fails to hold the earnings gap, and then like a little melt lower into taking out these lows and filling some gaps that we had left over from Q3. And it's also just like this behavior is not like an aggressive seller; it's more a passive buyer, and we get a good weekly look. So I still like Path. I mean, Oxy's kind of moving relatively clean right now. Just a commons trade. I like Oxy a lot. Like I said, for a move to 55, 54, and then maybe roll it to 60 to 70. Energy as a whole is just a big time rally, right? Big time consolidation, big time rally that's developing. Very minimal selling effort that's occurring. Like there's not a lot of supply in this range. It's all kind of been wiped. Um, but I think Oxy is my favorite in terms of like names that haven't broken out to new highs quite yet. And I think it has a lot of potential. But big time rally on energy. I mean, this was a good commons opportunity across the board on various names. I wasn't super convinced, and maybe I was a little bit wrong on it. I still like Oxy though. Some of these names have had some phenomenal commons opportunities to take. Disney is still a great commons trade. This is a very good weekly print, but like I said, that $100 window is kind of ideal. Ford as well. We're coming in on 4 inside bars heading into the report tomorrow after hours. Still like that. At this point, I think UNH heads for a true third lower low. So, like I said, this is going to be a name for a long-term commons trade and a shorter-term leverage trade. Similar, like I like Nike a lot still. TSM is one of those names I do think is developing a distribution, but we have to be a little bit patient with that. And then a lot of these software names look really good, right? So we had the kind of the distribution following the report in September on AVGO. We get the decline. We see a really nice weekly print off of the gap fill and the reversion to the gaps that are left above. That's pretty obvious. There's actually a really good trade you could have taken on Friday or Thursday off of 306. Like, I mean, you look at this, right? If you get that entry and that hourly change of character and you target the gap, that's a 3.5 R to R. That's a 2.8 to 3.5 R to R within this gap that we have left over from the week of the 20th, right? In WOG, it's kind of going to be the draw. We kind of see our preliminary signs of a buyer on the Friday 23rd session of January, and then the true kind of gap fill that sparks the reversion. This could head all the way to the earnings gap from December. We'll have to see. But I'm intrigued in names like AVGO, or not AVGO, Adobe and CRM, right? And IGV. We just see notable like underperformance since April. Accumulation is developing and big time declines last week with notable climax, like notable volume backing this on a weekly and daily perspective at pivotal ranges, right? You look at Adobe. I mean, just kind of take a look at this chart and tell me it's not reminiscent of an accumulation that we can potentially um, execute later on, right? And then the CRM as well, right? Big time volume, taking out important lows levels with a notable amount of kind of daily climax is being developed, right? So this is something I'm keeping my eye on. With an IGV as well. This was clean back here, but now we have some historic sequences developing on the software sector ETF, right? Historic. I mean, this was notable, but now this is very notable, right? So it's something that I'm keeping my eye on. But not much has changed, right? Not much has changed at all. Yeah, not much has changed at all. Still have my focuses and my broader equity market read. I do think that crypto can potentially do a little bit of something, well, some, but we'll have to be a little bit patient. So that's pretty much it.